Hello everybody, welcome to TraderMerlin Show for your Tuesday edition. Happy Taco Tuesday, everybody. Hope you had a great set. I hope you're doing better than Solana is today. Well, I got a button over here. Yes, Solana, some interesting things happening in the crypto space, which we'll talk about not in this show, but in my 6 p.m. session for the Crypto Investor Live guys. We'll briefly touch on it, but some fun stuff happening. Today's show is a result of listener questions, as is usual. I've had a few of them on this topic over the years, and I thought, well, let's address it. Before I do that, hello and shout out to everybody. I see we've got our usual group, but I see a lot of new people out there. Obioma, good to see you back with us. You used to watch the show quite regularly. Took a break. Now I guess you're back. Darren as well. Good to see you. Terry Koja. Dana. Brendan. Yes, I forgot to call you yesterday, dude. My bad. We'll get in touch. David as well from... Oh, yeah, and David, thank you for the message, by the way. Yes, I checked that out. From Ottawa, Canada. I guess I'm big with the Canadians, eh? Skills Docsman. We got Les Gold and John and... Mikias Photo. Good to see you, Mikias, as well. And Chris, of course, what's up? So find me that. I don't want a wagon, Chris. I want the 65, I think 65 Chevelle 4-door with something nice in it. All right, let's get into the show here. This is what we're going to talk about today. Manual trading versus algorithmic trading. And I'm just going to give you my 2 cents on it. I think most of you probably know my opinion on this, but I'm sure we can get a nice amicable discussion going on in today's chat about this one. So here's where it stemmed from. There were 2 questions that I wanted to bring up for this one. Hey, Ted, good to have you with us. First one was from Trey, which says, have you ever used trading bots? All right, before I get to the complex question that's after this one, I will say I have used them in the past, and my experience is probably not so good. It definitely skewed my opinions, not only my utilization of bots, but also the results. And so one of my good friends, he runs a trading company, and he has access to all of these different bots. And basically what we're looking at with an algorithm or a bot is something that is an automated trading system, right? And it could be programmed and monitored by you, or just a black box system you turn on and let it run. Of course, this is the proverbial dream for everybody in the trading and investing world. They all want to buy a little piece of software, plug it in, turn it on, and just watch the money just ching, 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 ching. I mean, that's the ultimate selling talk track for any sales guy in the trading space. Oh, you just turn it on and it does nothing but make money. I have one word which is kind of rude about it, but the word is bullshit. It's not going to happen. Here's the reason why. If you are using a system that somebody has proven, you literally turn it on and this machine makes money for you automatically over and over and over again, it doesn't work, because there's no way that person would sell it. Oh, it makes sense. There's no way it would make sense for me to... Let's say I developed an amazing system. So you guys know I'm Online Trading Academy born and bred. I am all about core strategy. And let's say I took core strategy, I added on my own little custom, maybe a couple indicators or things, and I decided to, man, this works for me. I'm going to bottle it up and I'm going to sell it. I'm going to automate this. I'll go into some code program, C++, Python, whatever, and I'm going to program this in so that you can buy this filter on, I don't know, TradeStation or Thinkorswim or whatever. If I do that, now you are doing the same strategy as me, so I'm literally cutting into my own business. If I also have a system that I can literally turn on and make money with it, you have to ask yourself, would it make me more money to sell it to you for $100 a month, or just let my account keep compounding at the rates of return that I'm promising you, and I'd be a gajillionaire by the end of the year? So personally, my take on it is these things are an absolute joke. Don't do it. If you find one, it doesn't work. The ones that are working, and they are working, there are absolutely algorithms out there, black box systems that are working, but the people who own them aren't going to sell them to you unless they stop working. And the best part about it is when they sell it to you, they will show you all these amazing track records that, of course, you have to trust and believe that they're real. But most of the time, they'll show you old school performance, and you go, wow, I got to get some of that action. And next thing you know, here you go, and you're a net loser on their black box system. Of the 2 that I purchased, one of them was kind of funny. I bought into 2 separate futures trading programs just as a test, right? I put $5,000 into one, and then I put $7,500 in the other. Both of them did nothing but lose money because of the fees and commissions that were associated with it. So it was basically just dropping and dropping and dropping and dropping and dropping. And actually, one of them went to a negative balance, which I fought and washed that one away. The other piece to me deals with people's sensational claims. And I've mentioned this story to you before. There was a gentleman, and by the way, I love when you guys send in comments and questions. Brendan knows with the if you want me to answer a question directly, do question marks before it so I can scroll through real quickly and find out which question was directed to me. Yeah, and Ted brings up a good point. He says, like a self-driving car. Yes. See, there's a slight difference there. With a self-driving car, it's a piece of technology that if someone comes first to market with that, everybody in the world's going to use it. And I think we all would love to have a self-driving car. I can tell you that I'm going out on a weekend. I would love a car that I can just say, all right, drop me off at my local watering hole and pick me up the next day. The challenge with trading versus AI, or with an automated car, is something it's not existing yet. It's got to be first to market. Somebody gets there, they'll dominate it. It's also years, if not decades, of compiled data and research. What we saw, or what I saw, I won't put anybody else in my court, but what I've seen over the years, especially when you look at these red light, green light systems, are just that. They'll take something like a moving average and throw a couple fancy flashing light bulbs on it, not telling you that that's a moving average, and next thing you know, you're like, oh, I have to buy this. And they have an amazing sales pitch, right? They have people sitting in the audience who are absolute shills, and they'll be like, does anybody have a stock they want to look at with our amazing software? And I'll be like, oh, I'd like to see Apple, please. Of course, I'm on the payroll of the team, and I pick a stock that has this most amazing trend, and of course the software does nothing but make me money. So you got to be careful with those claims. Now, I used to go do the trade show circuit in all over the world, really, but for the most trade shows, they were heavy in the U.S. So I would go to Dallas, I would go to San Francisco, I'd go to New York, I'd go to Las Vegas, to all the major trade shows. And as you go there, I always recommend you do one thing. Make sure you leave anything that you can buy something with. Leave your credit cards, leave your checkbook, leave your Venmo apps, whatever. Leave it at home, leave it in your hotel room. Don't bring it down to that floor, because the salespeople there will do whatever they can to get you to buy something. So there's this one guy. He's probably still around. He's still on circuit. I saw him at every show, just this old man. And it's funny because I'd see him at the airport on the way out of the trade shows, and he's always arguing and screaming at his wife, and just, I don't know, not a very friendly, nice guy, but he turned on the charm when he got to presenting his stuff. Now, what he did is he had a software that you could buy this software, essentially an automated algorithmic system. And this software would just basically generate returns for you. So I'm standing there one day, and I'm one who, I like calling out liars. I like when I see people who are lying, and I can go, know what, you're full of shit. You're lying, and these people deserve to know that. So this guy was on stage, and he again, every trade show he's there. And he shows his software, and he starts making these claims. And he says, guys, I have clients who've been using my software for 5 years, and they bring down 20% rate of return per month guaranteed. First off, if I'm the SEC, I mean, I would love to come down on these guys and shut them down, because this is a bogus claim. 20% rate of return per month, and the guy's been doing it for 5 years, and then he guarantees it. So I went up to my room, and I was like, well, this seems too good to be true. Because let's be honest, if this guy's selling this software for $500 a month, and it's guaranteeing me 20% rate of return, I'll pay you whatever you want for that thing. I can pull a loan against my house if you're guaranteeing it, and I'll be a gajillionaire in no time. So I thought what I would do, and I wish I had any of my friends that were there watching as I did this, but I built out the form for you just so you guys can see it. And I went back down to him later on, and I stood there with a piece of paper, and I said, listen, sir, I go, you, sir, are a liar. And he was doing a sales pitch to like 5 people. And I said, and of course I was nervous because it's kind of rude to call someone out like that, but I go, you, sir, are a liar. And he's like, well, what are you talking about? I said, you're telling me that you're going to guarantee me 20% rates of return per month for 5 years. And he goes, yeah, I've got people who do that. I do it all the time. I said, okay, here, let me show you the spreadsheet I just whipped up. And here it is right here. $20,000 my starting account balance and 20% rates of return. By the end of year 1, your account would be $178,000. And this is compounding, of course, which is great. End of year 2, I'm already at $1.5 million. End of year 3, $14 million. End of year 4, $126 million. At the end of year 5, I'm a billionaire. Literally a billionaire, $1.126 billion if you can guarantee me 20% rate of return per month. And I started with $20,000. So I went up to him, of course, and I said, you, sir, are a liar. And he's like, well, the people have different results. And the cool part was, these people who were falling for the sales pitch, they all kind of like, you could see them pause and go, yeah, that doesn't make sense. A billionaire in 5 years? I'm pretty sure if I could guarantee you guys that you were going to be a billionaire in 5 years, you'd give me $100,000 right now. Was there anybody here who would not give me $100,000 today if I guaranteed you'd make $1 billion in 5? If you don't do that, you're an idiot. Sign you up, right, Margaret? Anyway, that is a black box system. before you buy into any of them, make sure you understand the mechanics. What strategy is it using? I'm kind of here with, I saw Margaret earlier post that says, charts work for me. And charts may not work for everybody, but I'm much more a fan of manual driving here and saying I'd rather be in tune with the markets and automate pieces if I can, but I'd rather watch the charts and make my own decisions. Now, of course, the big concern is many of you might not have the time to watch the charts every day. That's why you have set and forget orders. Right? Set and forget orders are there for a reason. You analyze the market. You find trades that have, from your perspective, a high probability of turning and moving in your direction. Great. Entry, stop loss, price targets. I've essentially created an algorithm, right? I've created a program-based robotic trade. That's how I like to look at it. So let me go to the second question here, which we got Rob with us today. Sorry about the unemployment, Rob, but good to have you with us. Rob sent in this question. Oh, I'm sorry. No, but this wasn't from Rob. This is from Mario. So one sec. I thought I got you confused over here, Rob. So here's the question that comes in from Mario. Mario says, I have a friend who wants to start trading. He asked me where to start. OTA starting with core strategy is my recommendation, but it was out of his budget. He also sent me a link to 6-day courses which teach algorithmic trading, which I know nothing about. However, I said he should rather start with basics on how the markets function, followed by a specific strategy. Any comments and advice on what course education or beginner needs to take, also on AI or algo trading? So that's kind of what led me to that discussion, guys, is first, you want to know the mechanics of how to trade. And I agree with you, Mario. Your recommendation to me was fine. I would have recommended OTA as well as the first start. And it's not in everybody's price point. That's fine. There's also some, cheaper things that they could do within OTA to learn more. There's also an FAQ section and all sorts of resources to help make it easier for you. But from there, for me, it's about developing your skill set and finding out what works for you. I think you guys have seen different people on this program. For example, we have, Brandon Wendell. He loves using a moving average kind of convergence crossover. You have other traders who are into MACD and stochastics. You have some that are pure supply and demand. You have others that are using volume-weighted average price. I think that, for me personally, you could take any one of those strategies and make it work. The most important piece is wrapping rules around it. And if that means taking OTA's core strategy, wrapping some rules around that and programming it into a platform, then so be it. But you should be the one doing the programming as opposed to just buying someone's off-the-shelf platform that, from my experience, usually they don't work. Again, I fell for this years and years ago. Early on in my trading career, I thought that you could just buy someone's black box system, plug it in, and just watch the money pour in every single day. The exact opposite was true on the two that I participated in, which was the money just continually dropped every day until those accounts literally went down to zero. So that's my 2 cents for Mario. And for Trey, I've used bots. I'm not a fan. I think that it takes away from the skill set. Certainly when you go buy a car, you get better performance from manual transmission, right? It might have a little more wear and tear on the transmission later on in the clutch and things, but you get better performance by manually doing it. Automated is easy, but it doesn't always work. And the pitch factor for most of these guys is, it'll always work, you'll make tons of money, just like this guy did in Las Vegas. I mean, it was unbelievable. Actually, not just Las Vegas, but all the trade shows. Claiming 20% rate of returns per month, guaranteeing it. That is an absolute lie. So be careful what you hear out there. There's a bunch of stuff. I think I saw a comment come through here from Rob. I use a site called Dreama.com, which allows you to build bots with rules and visuals, which are then compiled in MetaTrader 5. Oh, that's kind of cool. If you and I like what you said at the end there, Rob. If there was quite good if you want to test stuff and try a bot. Very cool. And I think there's more out there like that. TradeStation, you can actually go into their platform and build all kinds of bots and say, if this moving average is crossed, then do this and this and see what the different results are. It's kind of cool, but personally, I would much rather just do things manually because I feel like that's where you're really, A, you're applying a skill set, B, it keeps your mind going and stimulated, and C, you can sometimes see when things are going south. For example, if you're in a bot and you say, when it does this, get in, when it does this, get out. Great. But it's binary. It's only going to go off of price or some condition that has been met. How often have you guys been sitting there in the market, and gals, sitting there in the market, let's say you bought something and it's going up, and you set a stop loss and you're fine. And all of a sudden, the market starts acting really weird and you see a sharp drop. It doesn't take you out yet, right? Your stop loss is still lower, but you see the drop and you see the weird action in the market and you go, I'm out. And you pull the trigger earlier. And just to realize that the market keeps on going down and it would have hit your stop, but you saved yourself some capital by getting out earlier because things just didn't seem right. I think we've all been there. We've all seen market situations where you go, ooh, man, something looks wrong here. I'm just going to bail and exit on this one. So I guess that was my short to long-winded answer on bots. I think they're great if you understand your strategy. If you really know your strategy works for you, you can automate it. I personally don't want to automate it mine. I'd rather trade it. I enjoy being in the markets. It's part of the fun. Kind of like I enjoy driving, just not in Southern California with our wonderful traffic. Margaret says, don't algos provide much more liquidity to the market? This is a good thing. So we're talking different things. So I guess algos get lumped into, I guess, one big category, but they really shouldn't. What I'm referring to are the individual automated systems that you can buy into. Most of the big algos that you're hearing driving the markets, yeah, those are big institutional things. Those are directly connected to exchanges and having co-located servers and using high-frequency trading and front-running of order flow. That's typically where the big liquidity comes from. When I'm referring to bots, I'm saying something that automates your trading style or automates a trading strategy. Most of those bots are designed to be front runners and take fractions of pennies off the front of everybody's trade, which there's tons of money in that one as well. All right, let me go back here because there were a bunch of questions that came through. How can you distinguish the algos from real traders? In the market, you really can't, right? At least from my perspective. Years ago, I could sit there and I could watch a level 2 screen and I could tell what was automated and what wasn't. Just by, if an individual got hit, they'd move like another nickel and a nickel every time. That was automated, right? It was just programmed into the software. Nowadays, I don't think that you can really tell who's there. The reason I do like the concept of people using algorithms is there's certain rule sets that go along with things like moving averages and stochastics and Bollinger Bands, right? We know that, if it pierces an upper Bollinger Band, there's a likelihood that people are going to now all of a sudden start shorting whatever security that is because it's just a self-fulfilling prophecy and it's outside the upper Bollinger Band. So we can start to utilize the trigger conditions from a lot of these indicators, which are the basis for a majority of the algorithmic trading platform. So when we talk about the quote-unquote self-fulfilling prophecy, I love it, right? You can spot and go, oh man, this is breaking down below a certain level on this indicator. And you know that there's going to be people who are selling it manually, but largely a lot of people automating it, and that creates even bigger moves. All right, what else do I got here? Yes, Brendan says 80% of market volume is apparently algos, and the only reason it's that high is because it's the high-frequency trading, or it's HFTs. And some people may not have caught what I just was talking about, but if you co-locate your server, so basically the NYSE has a server farm, NASDAQ has server farms, and these guys will pay tens of millions of dollars to put their server literally directly next to those trading floor servers. Why? Well, because my data that I get is lagging. I mean, it may not seem like it. It's a second late, no big deal. We're dealing with nanoseconds. And if this pool of liquidity, this algorithmic trading firm, this high-frequency trading firm, can see my orders 1 nanosecond before it hits the market, they can utilize that information. It's legalized front-running. It really shouldn't even be legal, but it is what it is in the marketplace. So they could literally front-run order flow out there, and that's where they're making money off of fractions of pennies, but they're doing it in such volume that it adds up. They might make 0.001 per trade. Okay, great. They made 0.001 cents per share on a trade. Well, they're doing 50 million shares. It adds up to some real money. Hey Merlin, have you tried to program your own strategy? I have in the past. I didn't have a lot of luck. I'm not a programmer, so that was part of it. I actually had a conversation with some really kind of high-end programmers, and I almost gave them away my strategy, and I said, you know what? At some point I'll have someone sign an NDA and we'll just do it on my own, but I don't know. I think you guys can see that what do you think my day would look like, right? If I had an automated system right now, would I do this show? I probably wouldn't. I'd have nothing to talk about, right? Part of the reason I love doing this is I'm in the markets every day, whether I'm very active or I'm slightly active, whether I'm trading options, futures, forex, or crypto. To me, part of the fun is talking about the things that I'm seeing on a daily basis and sharing with you guys, because you're sharing stuff with me too. So I don't think I'd want to have an algorithmic one. It's just me personally. I know some other people would. Merlin, with AI, can't I program a bot to do my same trading behaviors? In theory, you could with AI, right? You have to get your emotional piece in there. One of the reasons I actually do like bots is it does remove the emotion. You become systematic. And I think those of you who are struggling with trading right now, probably part of the root of that problem with your struggles is you're changing little things all the time with your strategy. As a bot, you're not changing anything. It's fixed. It's code, right? Code don't lie. So I think that is definitely one of the biggest advantages of having a bot. But I also think that trading and making mistakes is great. It's in our nature. It's also, think of it as a parallel to things you do in your life. Is it bad to mess up and make mistakes in your life? No. You just got to learn from them, get back on, and correct those mistakes and make things better and constantly be improving ourselves, whether it's trading or relationships or cooking classes. Who knows? All right. I don't have a PhD in mathematics. You don't need one. A lot of these guys, it's such basic programming. All right, what else do I got? Margaret, don't algos provide... Oh, we already covered that one. Covered that one from Rob. Sorry, I'm just going back through. That's Naum says, wow, that's how they front run. That's partially how they front run, right? Partially. And surprising to me, it should actually be stopped. I don't get how somebody can have access to information sooner. That's the definition of front running of order flow, but it's a technological glitch, right? It's just a little, because remember, you have the NASDAQ, for example. Their servers are located not in New York, they're in New Jersey. And they have a backup redundant system, but the main server center is in New Jersey. So imagine that data has to go through, I don't know how many hops till it gets through to my internet. And of course, there's going to be some latency there. And then of course, when I'm sending my orders out, again, I have to deal with whatever latency is in that system for me to get all the way back to Jersey. I am wanting to branch into futures, done the OTA course. What are good futures? What are good futures for a beginner? I would start with the indexes. I would start with S&P, NASDAQ, and Dow. And once you get comfortable with that, I would say venture into the Russell, which tends to have a bit more volatility. Luckily, the Russell has changed. Years ago, the structure for... right now, it's the RTY. It used to be a different contract, and it was way more volatile. It's gotten a little bit better. Yes, Brendan says start with the mini ESs. Yeah, start with something small. And I think the key here for you, Rob, is if you were to start off with a full S&P contract, that's a lot of money, a lot of risk. But you can go all the way down. You can go the mini contracts. You can go to the micros, which you're not going to make a lot of money, but that's fine, right? You're trading the micros so you get a feel for it. It's like I want to ride that bike on a flat ground first and get used to how it rolls before I start going down steep hills and with full suspension bikes. So start with the micros and then build your way up from there. But Ted says micros, but be careful. Don't use all micros, right? I wouldn't be trading the micro Bitcoin. I wouldn't be trading the micro oil. Just stick to the index futures for now till you get a feel for how it works. And then I would say focus your knowledge on the contract specifics. For example, you go from indexes to something like crude oil to Bitcoin. The contracts, the margins, the maintenance, the delivery, it all changes. Trading hours can even change. So really important that if you are trading some exotic futures contract that's not normal, you always check what's going on with it because there might be some odd trading hours and you could get caught with that one. So the flash crash is what I go through every day. The flash crash? What was a flash crash? Was it related to the regulators turning off liquidity? Well, there's been many flash crashes. So flash crashes, one of the main ones that happened a few years back was due to algorithms and high-speed trading. So what happened is basically price started to fall, triggered a bunch of people closing out their longs, probably getting margin calls on their longs. They have to sell their shares. That further accelerates the selling process, which triggers more algorithms to start shorting the market or liquidating their long positions. So now you have this landslide of selling pressure and you get these real big knee-jerk reactions. Now when things start falling fast, we have these market participants who are called market makers. A market maker's job is to provide liquidity at all times. However, there is no definition that says how competitive their liquidity is. So let's say, for example, I've got the S&P 500 trading at 4,437 right now, right? If I'm a market maker and all of a sudden the S&P starts to drop from 4,437, now it's 4,430, then 4,420. How likely do you think I am going to stand in the face of this thing that's falling like a rock because I'm obligated to? I might put an order down to buy at 4,000. I'm 400 points away from the market. I'm still fulfilling my obligation as a buyer. I could put my bid at $1 for an S&P contract. Of course, I'd love to get filled at $1 on an S&P contract, but it's not going to happen. So don't trust that market makers will provide liquidity in a competitive manner. The reason I say that is when things fall quickly, those who are supposed to provide liquidity will back away. and move very quickly to let that thing fall, knowing that something is either wrong or that they might be able to buy it at a lower price. So that's a big one to me. Is flash crashes, I think, are not done. I think we'll probably have another one here soon, right? We're due for a flash crash. Honestly, we're due for a big market correction, in my opinion. But I think a flash crash will probably be the first piece that comes our way. All right. Oh man, that was a long-winded one. Let's go to some more listener questions here. And again, thank you guys for all the conversation. Love it. There's a couple things. This one's just kind of an easy one. Kurt says, some of the brokerages are starting to offer direct access to crypto. Tasty Trade offers 13 cryptocurrencies with more to come. And Interactive Brokers is rolling out very soon, if not already. From my understanding, the limitations are buy and sell, no shorting, no staking. Do you have any experience with these services, thoughts or opinions on safety? I'm not a fan. I'm not a fan of, and I hate to say it because, we're hopefully doing stuff with TastyWorks here with regards to back-end programming for CliK, but I personally would not trade on those types of exchanges. Why? Well, Tasty Trade is offering 13 different cryptocurrencies. You can only buy and sell there. You can't short, which is okay because most exchanges aren't allowing you to short anyway. But you can't bring in any crypto, so you can't transfer over from another account, and you also can't take anything out of those accounts. To me, that's important. They're also not offering any sort of rewards or yield for me keeping my cryptos there. Now, you go to some of the other exchanges, you could get paid quite a lot. I told you my Polkadot. There's no way I'm going to keep Polkadot at Tasty Trade if they allowed it because I'm getting 12% over at Kraken and other assets I'm spreading all around to capitalize on it. So just because Tasty offers it doesn't necessarily mean you need to jump into it. If you want to just buy and hold and that's it, okay, fine. That'll probably work for you. But I would rather have something that gives me a lot more flexibility. It's almost like a Robinhood type of account. Robinhood's crypto will allow you to buy and sell. You can't import, can't send, can't transfer, can't move, can't do anything else other than buy or sell inside their portfolio. So if that's all you need, great. For me personally, I need quite a bit more than that in my trading with crypto. All right, Rob is here today, so I got to get to his question. Let me have a sip of water here. Been talking all morning. All right, so we got two different price charts on here. And Rob is in the UK. He's got a trade that, man, had a heck of a winner on it, and he's wondering what he should do with regards to stop loss. He says the lower black line is where I bought it at 10.95. Let me show you guys the chart. I might be able to do this here. Show you the chart as I read it to you. How about them apples? All right, perfect. So there's the first chart. Oh, damn it. Let me see. I want to be able to read this thing. No, won't let me do it. All right. The lower black line is where I bought at 1,095 pence or $10.95 pounds or £10.95. The pounds always throw me. And the upper red line is his new stop loss at 21 pounds and 30 pence. So he's got a stop loss moved up, which is great. The question I think is, would that be a logical point to lock in profits on this? So let me move right here and show you this one. So here's your daily chart of Softcat PLC. Don't know him, but hey, it's not for me to know. It's just look at the price chart at this point. Love the fact that you bought it down there at 10.96. That's awesome. And I do like your stop loss at 21.30. Now, you can see it's had this beautiful uptrend for the past couple of months. We'll zoom into the 4-hour that you sent me, and we can see a little bit clearer. And I actually really like the way you did your candles too. I love black and white candles. It's just so much easier for me to see. And the question would be, is 21.30 the right spot for this? Right now, I love your analysis. I actually think you've got it drawn perfectly. You've got this nice channel. Yeah, it's popped above it once or twice, but you're really drawing a channel to get a general idea of where something is going. So right now, it looks pretty good. Would you put your stop loss there? Or, I'm going to just kind of, oops. Jeez Louise, Merlin. I try to get this pen up here. The only other area where I see I might consider moving my stop loss to would be this little spot right here, which is slightly lower. And the only reason for that is the red line that you see right now, it broke above it, sold off once, sold off twice right to it. So it may be chipping away at some of that demand. And now, that's just me throwing ideas. I probably myself would move it slightly lower to that one. But otherwise, I think you've got it in a good spot. I think you're looking pretty good with this one. Yes, the volume bars are colored. I got that market. I'm okay with volume bars because I don't care personally if volume is up or down. It's the candles sometimes I can't see the colors and distinguish between. So Rob, I like it. I actually think it's a decent trade for you to be in. Looks good to me. I think the second part of your question was, let me make sure I get that one up here. Bear with me, guys. I'm trying to read both things. Would you agree with the stop loss? Yes, I would agree with it. It depends on how tight you wanted that stop loss to be, right? Like if you wanted to give it a little bit of wiggle room, because honestly, that chart looks like it's ready for a move down. I mean, that trend has been perfect. It looks like it's bound to have a pullback here at some point. So I'm okay with it. It's just a question of how much you're willing to give back. You've got a phenomenal winner on right now. Yeah, right? May as well have a tight stop loss. So I think you're fine with either one of those numbers. But congrats, looks good. And I love the fact that you're, putting a stop loss on it. Let this thing keep on moving to the upside. If it crashes, great. You move out. Yeah, also colorblind. I think the stats I read were something like 19% of men are colorblind to red and greens. Yet I use red and green candles on my charts every day. So there you go. Cool. Let's see. When I look at the monthly, let me see real quick here to get Naum's question. When I look at the monthly and weekly SPY, it looks bearish. Do you think that the markets are starting to correct for the tapering? Maybe a good time to short the SPY. What are your thoughts? I am already short. I've been shorting. I think I told you guys I've been shorting for a little bit. I've been adding to that position. Here is the SPY. I added a couple days ago some more, and you guys can see I have these lines drawn on here, and these, I think we actually had left these on here. These were points where I was looking to add to my position. So presently, as we speak, I have 35 puts on the SPY, and I have 25 puts on the NQ or triple Qs. So I'm in right now, and I don't know if I'll be adding to those anytime soon. You notice if we do start to sell off here and we get momentum down on the S&P, 4350 looks like a logical bounce point. Now, if I get another 110 point move in the S&P with 35 put contracts, I'll probably bail out of that position because it's going to be a pretty aggressive rate of return in a short period of time. What I do like right now from a bearish perspective is notice the volume on the ES. Right, you've got volume has been increasing over the past week. We have more selling coming in. We talked about this, I think on TraderMerlin show last year sometime, talking about how volume can be a confirming indicator. And when something sells off like this, if it's sold off with no volume, there's no emotion there. Now we're getting the emotion. We're getting a little bit of a panic sell here. Now, of course, what was interesting is having a day like today where the S&P was down 0.5%, VIX was actually almost unchanged. So it really was not a big deal. Apparently not a lot of put buying today. So I still am somewhat bearish on it. I'm obviously a little gun shy because of what's happened to me over the past year and a half with my huge short trade last year. But I'm building one out. I've got the NQ here as well. Notice the NASDAQ's coming right down into a demand zone. It was this kind of spike up, bounce, and then just rip to the upside. So, I think we get down below 15,250 on the NQs. Then I think we're back down in the middle of this yellow box range and then hopefully break down even further and we see some more downside movement. So I definitely am bearish at this point, but not aggressive. I'm slightly bearish because look at the trend. The trend looks just like Rob's chart. It's been a beautiful uptrend, moving higher highs, higher lows. So, if we were to draw, actually let's not draw. Let's put a moving average on here. That's the 200. All right, so you guys see what I just put on here. I just put the 50-period moving average on this bad boy. And that 50-period moving average it's bouncing right now. Like we literally hit it today. I think if we get a close below the 50-period moving average, I think a lot of people are going to go, okay, maybe now I'm going to start taking some profit. And I'm kind of just waiting for that to happen. It hasn't happened since mid-June. We had a close below the 50. We could even use a tighter moving average. But I think at this point, we're just starting to take a breather, a little bit of a rest, but it could turn into something even bigger, and that's kind of where I'm positioning myself for right now with my put options. What else I got? I'm not expecting a big drop, maybe down to 430. Correct. Yeah, I'm not expecting a monster drop either. Let's go SPY because that makes the numbers easier. 430, I'd be totally fine with that. But, if we get to 430, you have to realize we would have broken this other area of demand at 436. Then I think we have a greater argument for new lows being put in. So I hope we get to 430. I'd love to be, in a decent short position, having 60 puts or 60 puts short right now is fine with me. I'm okay with that. Maybe I'll add some more if we get rolling even further. I will not short until the Fed officially reverses course or if the 10-year U.S. Treasury spikes out of control. Well, I don't think you're going to get the Fed officially reversing course, so it looks like you're staying long, brother. You'll be long a while. On the ES, how do you explain the volume on yesterday's green candle? I don't necessarily explain it. I mean, it is what it is. It was a high volume day. Now, certainly coming off a 4-day market slide or 5-day market slide, I'm sure there was a few people who were panicking. So you had this big battle. It's more important, well, I mean, it's irrelevant what you just brought up because you have this kind of spinning top. So a spinning top is this green candle that formed yesterday, and what it usually is a very small body, meaning the green or red part is very small, and then you have a topping and bottoming tail, which you guys can see there. So it's a spinning top, which usually reflects indecision. So from a pure candlestick reading perspective, you had indecision on high volume. That's good, right? You want there to be emotion there. Now, for me, the way that you trade that is you would simply put a line across the top of yesterday's range, throw a line across the bottom of yesterday's range, and you basically say, I'm not doing anything till it breaks out of that range because it could come ripping back to the upside or it could come down. So, I know it sounds so binary. It's going to go up or it's going to go down or sideways. Well, wait for one of those things to happen before you jump in. The fact that we broke down today looked good, although we fell right to the 50-period moving average and then bounced up. So I'm still not convinced that we're moving to the south side, but if we can get a close below that S&P or the ES tomorrow, below that 50-period moving average, I'll be a happy camper. All right. Holy cow, I got 38. All right, we're doing okay. We're doing good. All right, what other questions did I have? There was a couple more that came through. Jeff, you asked me, I think he might be here with us today. He sent me this question. It says, can you go into how you select the stock, ETF you choose to buy or sell options? Also, since you have to pay for options when getting into a trade, can you show which of these strategies is more profitable? Well, I'm using a strategy that's not the most profitable, right? Selling puts is probably not going to bring in as much rate of return as doing some spreads. You say you usually only sell the SPX. Last year you're doing well with some stocks like Dollar King. Ooh, yeah. The problem with Dollar King or AMC or GME, these types of companies, they're too unpredictable, right? So I did trade a little bit on AMC options, got some really great rate of return, but they're dangerous. So you asked, what am I looking for? Well, I showed you this before when I did the video on the 1% strategy, and I even have one second, I'm gonna bring it up for you. Here you go. So this is a watch list that I use for my 1% portfolio, and if you want to, you can go back and go to TraderMerlin's YouTube page. Go down specifically and search for one. I think it was called the 1% strategy, I think. I go much more in depth on it, but these are generally, they're not always, but these are generally the 14 different ETFs I'm using to sell options against. And they're all ETFs. I don't want to take that individual stock risk. Jeff, when you're trading Dollar King, I remember you doing that one. I was like, oh man, that's dangerous. Dollar King was a huge mover for a while, so very dangerous. I want to be selling something that's a little bit diversified so I don't get that single stock risk. I don't get that, oh, they got cancer drug approval and all of a sudden it shoots up 500% against me. I don't want that. Now, granted, you're probably going to be getting higher rates of return by trading Dollar King or AMC or GME or some of these high flyers, but it's just not worth the risk for me. Remember that one portfolio where I talked about the 1% strategy, but the goal is get 1% a month. Don't take a lot of chances, 1% a month, 1% a month, 1% a month, and keep going that way. So that's how I was approaching it, and I use this list right here. You notice it's most of the sector ETFs. I've got XLE, XLF, XLI, the major indexes like the SPY, NASDAQ, Russell, the Dow. I've got technology, consumer staples, healthcare, utilities, real estate, gold, and silver. That's pretty much it, right? Part of it is I don't want to have a massive list. I don't want to have 100 different things on here. This portfolio with these instruments right here, I could find something that's going to give me some good opportunities. Today I was actually thinking about maybe selling some puts and financials because we had such a big red candle for today, but I didn't get around to it. Industrials as well. You could probably make a few bucks by selling this Friday's options on industrials because the premium was jumping today. Well, demand zone is down here right around 99. Well, it's $2 away. Is it worth that risk for a couple of days? I guess you gotta take our stop losses and analyze them. But anyway, a lot of different opportunities here in these, especially because of today's sell-off. But that's the basics of it, Jeff. That's how I approach it. All right. What else did I want to get into today? and indexes are ultra boring. They are. But remember, if I'm looking at a strategy that's designed to be boring, right? I'm looking to make 1% or more per month in that portfolio. I don't want to have the crazy, crazy stuff. Cryptos makes my heart sing. Depending on the day, Brendan, it might make your heart sting. I mean, some of these moves have been crazy. One of the things I'm going to talk about today, I'm just going to briefly go over it with you guys here. Here's our markets for today, by the way. We haven't talked about it, so let's do it. Russell 2000 bringing in the ugly one, down 1.3%. I have put options right now on the Russell. I have actually not on the Russell, I have them on IWM. I think I might have it marked still. 212 is my number. So I've got 212 puts on the Russell. I don't think we're going to get there by Friday, but we could. I've got Wednesday, Thursday, and Friday till expiration. Collected a little bit of premium on that one, but nothing too exciting. Dow was down 0.8% today. Really nothing exciting there, although it has been below this 50-period moving average. I'll even throw the 200 on here for fun, which is way down there lower. S&P. All right, S&P bounced off that 50-period moving average today. Like that, at least from a demand perspective, with high volume. But if we get it closed below that, I think there's definitely some downside movement. Same thing with that NASDAQ. Right, NASDAQ's coming down to demand, but it's clearly the strong lead dog right now. And, we get below that 15.2 mark. We're back to sideways consolidation. Really, it's all about 14,800 if we get below that one. Crude oil. Oh, yes. The little pop to the upside today. It was drifting down, then all of a sudden, 3 days in a row of nice move to the upside. I think you got your little breakout trade here. It also closing above some major moving averages. It actually is looking very positive right now, but little spinning top today, so we'll wait and see what happens on tomorrow's session. Gold, right into areas of sideways consolidation. You guys can see I've got the 50 and the 200 period moving average, which are almost converging, which tells you that it's really not doing anything. It's just kind of sideways. And then lastly, you've got Bitcoin. Bitcoin looking great. You've got your 200 period moving average moving up, your 50 period moving average moving up, and a nice little move up today out of that 44,000 mark. So I'm actually feeling pretty good on Bitcoin right now. It's at 46,500 and change. So let's see. Will you do more crypto shows for beginners on this channel? I'll talk about it a little bit, but any sort of in-depth stuff I'm going to save for my Crypto Investor Live program. I don't want to cannibalize that content. But what was interesting today, if we look at, where is it at? Where is my Solana? So you look at Solana. This blue line is where I got out, and I was pissed off because it spiked from 139 and change where I got out all the way up to almost 220. I was like, you got to be kidding me. But it's down. Right? The Solana network has crashed. It's been down for 10 hours. So here is something everyone's saying, it's this amazing network. It's going to be the next Ethereum killer. It's been down for 10 hours, meaning if you hold Solana right now, there is nothing that you can do. You can't buy, you can't sell, you can't trade, you can't do anything on Solana right now, which is kind of funny because I'm hoping it keeps on tanking, right? I got out at 139.69. We're almost there. I mean, right now there's a lot of negative press hitting Solana. People are laughing at it, pointing the finger at Solana. It was a darling. Now all of a sudden they're talking about completely restarting and rebooting the entire network, which is like, you really? Anyway, I thought I would share that one with you. There's been obviously lots of movement. You can see there's a lot of positive stuff and negative stuff. The question that came through yesterday was about Litecoin, which you guys see this monstrous spike. These types of claims, yesterday Walmart issued a press release saying they were going to accept Litecoin for payment, and Walmart denies it. So who knows? I think at some point maybe Walmart will accept crypto, but I don't dump it off those rumors. Last piece from KN Squared. Thoughts on AMC and GME? Ignoring the noise, does seem like legitimate cases for strong short squeeze gains. Why not take the opportunity? What y'all think about it? Merlin, Brennan? Why not? So let's go look at AMC. All right, so I'll go AMC. I actually think AMC long-term has viability. I mean, I do think that theaters at some point will come back online, but right now, I mean, I can't even go into a concert without, I'm talking an outdoor venue concert without showing proof of vaccination or getting a test in the last 48 hours. That's not going to be the same for movies, you know, that's going to be the same for movies. I think you're going to just get skepticism on movies for quite some time. I personally think that this is not a short squeeze candidate. I think this actually should have more shorting to it. I think that it should be drifting lower because anybody, and let's be honest, has anybody here in the room gone to see in the physical movie theater a movie in the last year and a half? Has anybody? I know I haven't. I kind of wanted to, but first off, there's no good movies anyway, right? Everything's now being released on something else. But I think there's probably a skepticism on most of our parts about going to a theater. It's just not the same experience being in a tight room with a bunch of people. I'm pretty sure that most of you probably haven't been to a theater. So where are these sales coming from? What has justified this security going from, God, and COVID didn't even start back then. COVID was 2020. Right? What justifies us going from $2 to $47 that it's at today? I don't see. Oh wow, a few of you have been, Miles and Chris. Wow, cool, awesome. Not for me, but I just would think that most people wouldn't want to be in a movie theater. Oh, that's Texas. Forgot Texas. Yeah, I think you guys are surging in COVID right now too, but it's okay. We'll do something. So cool. I got a bunch of people that have been to the theaters. Anyway, did they ask you about vaccines at the Fish concert? Yes, they did. We had to show proof of vaccination or a test within 48 hours. So anyway, I'm not a fan of AMC. And I saw the question earlier about, is this a potential for a short squeeze? No. Right now, you've got prices drifting up. If anything, I think you're going to see more shorting coming in. I don't see this as short squeeze potential. GME, right? GME is mind-boggling to me that it's staying at $199 given the fact their most recent earnings were appalling, right? This is a junk stock. This is I don't have much more negative things I could say about GME and its existence at $199. I mean, they're even shutting them down around here. So how on earth are you possibly at $199 for GameStop? I'm pretty sure you're going to see the different hedge funds out there shorting this thing heavier, and maybe the Wall Street Bets guys can try to pop it yet again. But let's see. These guys are, for the most part, diamond hands, right? Diamond hands meaning, oh, I'm going to hold it forever. Well, you know what? You can only hold so long before this thing goes all the way back from $199 back to $25, and my guess has been 10 years. GameStop will be a footnote in the financial markets dictionary of crazy things that have happened, because GameStop, what's their model? Video games, no one's playing those in a center. No one's buying physical discs anymore. It's streaming everything. So I don't know. Sorry, KN Squared. I might not have been the answer you're looking for, but I'm not a fan. I don't think that those are strong short candidates. You know, you could be going out and let me see if I'll see real quick if I can bring this one up for you. It's gonna take me a minute to bring it up. If you go out to, I think FinViz actually allowed you to screen and look for short interest, float short. All right, so I'll bring this over here for you guys. And so you could look at something like this. These are all companies which have a higher than 30% short float. Now, you can't sort, apparently. There's no column for short interest, which is kind of stupid because I'm looking for short float over 30%. But all of these are potential short squeeze candidates. All right, these all have the potential. Now, real quick, let me visually type some of these names in just so you guys can see what we're talking about here. So let's go to, yeah, definitely not a fundamental play. So let's just go, let's AGC. So these are all companies that have over 30% short. This is something that's a short squeeze candidate, right? When you have it just keeps getting beat down and down and down and down and down and just keeps tanking, eventually you could get a short squeeze out of this. I'd want to do more research than arbitrarily buy, but here's Beam, another one. Nah, don't like that one. Best. Ironically, it's called Best, and the chart looks like it's the worst. It's kind of funny. You know, this is also another one that might be a potential. Usually short squeeze candidates are really cheap stocks, right, that have high short interest, and that's what you're getting here. This is the Wall Street Bets Reddit type. I mean, basically, I'm could run a Wall Street Bets room right now by going, oh, let's go to Big Five Sporting Goods. Nope, already moved up too much. No short squeeze possibility. Fisker. I'd have a hard time with this one. I actually like Fisker, so no, I wouldn't touch Fisker. Canoe, GOEV. All right, maybe this one. It's been getting crushed. It was up at $25. I go check the short interest and see how bad it was. IVC, no. Oh, Nikola. This one I don't think is a candidate for a short squeeze. I think this one's just kind of stuck in the mud. Anyway, there you go. Oh, we're going to spam me, Dennis? All right. Welcome to the show. We don't usually take spamming here, but, you know. Let's see. So you want to know about Alibaba? All right. Sorry, Dennis. You keep that up. I'm going to block you, buddy. Alibaba. The question from Koja. Well, I guess what about it, right? You know, to me, there's a lot of potential for Alibaba. I'm a huge fan of Alibaba. I do a lot of transactions on Alibaba. I actually think it's a potential buy here long term. I'm a fan. You've got a real ugly situation here with price over the past few months, but it's been drifting back down, drifting back down. And we've gone from 320 to 160, a 50% drop in it. Crazy. Where's that buy point? I think you've got a couple coming up here, 149 or call it 150, and then the ultimate one would be down around 130 and 50. No problem, Dennis. So there you go. And the last one before I wrap up here. Cool. Yeah, go for it, GN. I'm not being anti your suggestion. I certainly, if I see an opportunity for shorting or for short squeeze, I'm all for it. But I just don't see one there on that specific security. All right, what else we got? There was one more I wanted to see. What was it from Margaret? Will GE break out before going sideways for a long time? GE's the master of going sideways for a long time. I don't know. I mean, if it ain't broke, don't fix it. And to me, this one is just dead sideways. I wouldn't touch GE. Even though they did a reverse split 8-1, it's just reversing sideways. Find something better. I mean, when you have the moving averages like this, especially long term, the 200 and the 50 encroaching on each other, it's just flat and boring. Nothing to do. Nothing to do. When am I moving to Texas? I already had a house in Texas. I had multiple houses in Texas, Chris, but not for me. Everything's bigger in Texas. I'm not. Texas is good. I don't mind Texas, except San Antonio. I didn't do it for me, but I definitely loved Austin. All right, I've got to go. Hood, just because Katut is one of our regulars, and she asked about Robinhood. Here's Robinhood, and you're asking about it. Well, look. Obviously, you know my take on Robinhood. I did a video years ago that talked about how Robinhood was, you get what you pay for. It's free. Okay, well, then you're the product. So I personally see Robinhood continuing to sell off. I think more people are becoming aware of how their business model is run, what they do, the sale of order flow. And if the SEC and regulators crack down on order flow and remove that model, then this company is dead. Totally dead. I don't, guys. I got to run, Chowski. Sorry. Bring it up on tomorrow's show. Tomorrow I'm actually going to have David Warner. So we'll do a Forex show tomorrow with David. It's been a while since we've had him on. He's one of my good friends from New York, so it should be fun. If you guys have... Daniel, you okay there, buddy? You getting excited? Daniel. You're like the 3-year-old kid that's always pulling at mom's clothes. Mom. Anyway, let me know what topics you guys want me to cover tomorrow. I see you've got a bunch of questions coming through. Dennis, do me a favor. Email me at TraderMerlin@gmail.com and then send me what you want me to look at with regards to that specific coin. I'm glad to check that type of stuff out. If you got comments, feedbacks, etc., let me know at TraderMerlin@gmail.com. And I'll hopefully get to that tomorrow with David Warner on our program starting at 2 p.m. Eastern Standard Time. Thank you guys so much. I'll talk to you guys later. Bye.